Hi everyone, and thanks for tuning in to this week's Market Outlook from Exness. In this video, we're going to be looking at a possible idea for trading over the next few days, what narratives are driving that idea and possibly leading to its fruition, and what traders need to be aware of if they're going to take that position. I'm Michael Stark, Financial Content Manager at Exness, and joining us to give the idea for this week is Stanislav Bernikov, Trading Specialist. Thanks very much, Stan, for joining us.
Hello, Michael. Thank you for having me today.
What are we looking at then this week, Stan? What is the idea for a possible trade the next few days?
Yes, so to give a little bit of a context, so we have ongoing rising yields for 30-year Treasury bonds, and not only 30-year Treasury bonds, but we have bond prices declining every day pretty much in the world and particularly in the United States. And that's why when we have this situation, so investors are getting really nervous because they are afraid of that, because that's a huge amount of capital moving out of the bond market. So, and they are cautious, they don't want to buy anything or hold positions overnight. So we need to understand this context. So it's pretty risky for holding some positions. However, another narrative which we have this week is the publication of earnings of large tech companies, really big companies which represent 40% of NASDAQ index, such as Apple, Microsoft, Amazon, Google. And that is usually a positive driver behind equity prices and cryptocurrencies. And we know this effect as a pre-earnings rally. That's why I'm putting the idea for a potential long for NASDAQ, maybe for a couple of days until Thursday. Well, you got to be, of course, very cautious and careful and protect your positions at all times. And, if you want to take this risk amid, escalating debt crisis, so that would be okay. But what we see now, it's a little bit of a positive coming back to equities. So for risk takers who want to take the risk among the first people, that potentially would be a decent idea. So as for events this week, so we have earnings rolling in, on Tuesday, Wednesday, Thursday, important earnings will be posted. So we will see whether corporate earnings are good or bad, if they fit expectations or not. That will give the important piece of a puzzle for investors, because recession is, on all headlines, and we have all indicators of recession flashing. PMI is below 50, yields are going up, and the probability of recession from Conference Board, as you see, is 96%. So we are pretty much there. And that does not necessarily translate into the market crash. We got to be clear. Even in the bear market, still, we might have plenty of, short covering rallies or big pullbacks. So if you take any bear market, you will see plenty of situations when the market actually pulls back for 15%, 10% up. And so it kind of fluctuates back and forth with high volatility. So if you are a risk taker, I would say, so you can actually jump on the board in NASDAQ or some tech stocks.
All right, so in summary then, the idea for trading this week is the NASDAQ, a cautious opportunity to buy the NASDAQ. And the main narratives driving that include the surge in the yields of 30-year Treasury bonds in the USA in particular, but generally yields, bonds moving up as money moves out of the bond market, negative PMIs and all the indicators of a recession. And the really critical events for traders to monitor this week are earnings reports, primarily big tech, such as Amazon and other major tech companies in the USA. So thanks very much, Stan, for joining us to give us the idea for the NASDAQ for this week.
Thank you, Michael. Have a good trading week, everyone.